All right, what is up, YouTube? I am back once again. I know it's been a while since I actually made a video. So what I'm going to do, I'm going to go ahead and share the screen so that way we're able to see what the portfolio has done so far. And as you know, there is a sell-off on Wall Street. So we'll go ahead and talk exactly about, what's really going on with the stocks. Okay. So this is our portfolio. I've made a couple moves since I would say since the last time we made a video. So during my lessons, I do make trades in and out just to show people examples of how to make trades or how to how to pick the right investment. So we have Apple. This is more of a long-term trade. We got Berkshire Hathaway, which is another long-term trade. As you see, we're now negative for that position. Now with Berkshire Hathaway, this is more of a long-term trade. So at one point in time, this will start to turn back positive, and this will be a $220 stock. As you see, we can go to the chart right here, which was I think 217 was the all-time high for Berkshire Hathaway, and oops, one second. Yeah, 217 was the all-time high for Berkshire Hathaway, and as you see, we're getting to that close to oversold momentum in the chart. And whenever you get a chance to get discounted growth with Berkshire Hathaway, you might as well go ahead and jump on that opportunity. Once we're able to see the banks and the airlines start to take off, this will be one that you really want to be invested in. Okay, so we have CBOE. I bought this just because it's oversold. I have a personal position in this. It's kind of making me a little nervous because they do report tomorrow. Now, as you see, the stock is oversold. Momentum is kind of pointing up here. But what makes me nervous is that the stock has sold off from 138 to 113. I think my buying average is right around 112.50 ish. And as you see, the stock is at 113. Of course, I'm making somewhat profit, but I'm in it for maybe all the way to the 120s or maybe 125. So I definitely do have an end result for that. But the CBOE group is definitely kind of where me right now. As you see, the XIV was one of the positions that we were talking about. Just the last video, just because of the volatility, you're able to play on the volatility of the market. And as you see right here, the XIV just completely busted, went from 146. And after hours, I think this is what happens is that when they have these volatility measures, they just don't need to trade after hours or maybe pre-market. Just when the market opens, that probably would have stopped this crash from happening. But as you see, what happens is that the TVIX went up 100%. And when you have something that goes up 100% and you have something that goes inversely with the stock that goes up 100%, that's what kind of worries, investors or the people that have been trading the stock. So that's why you see the stock go from 146 all the way to $5.19. The stock did fall about 90%. After hours, just because the volatility increased on that sell-off because the TVIX did rise over 100%. So they should have had measures in place, just to halt that, or maybe, just not just trade that after hours, like a lot of these leverage ETFs or the other ETFs that do mock and follow other indexes. So they do reset each and every day. But for the XIV and for the TVIX, these will kind of be the ones that people will be watching for, because I know the XIV will be closing down, I think, on February the 20th. Definitely, I think that's right. As you see right here, Credit Suisse, details of liquidation going on. Yeah, February 21st. And I think the shares are worth about $4.22. I think that's what it was the last time I checked. But yeah, that's what happens really when a ETF busts. That's exactly the results that you'll see. Okay, so we have the CBO group. Like I said, Procter & Gamble was another one. Really, all you could have did is just, looked at the Dow 30 and just thrown a dart at whatever stocks that were oversold. We had Dow DuPont, which is down just the other day, and you could have bought that around $66, and then the next day it was up all the way up to 71. So you could have made an easy $5 per share type of trade, or maybe this might have been a good time for you to actually buy shares in Dow DuPont. I know, like myself, I've been trying to buy into Dow DuPont forever, and now we have a sell off, and now I'm stuck in another stock. So you want to be able to have some cash on the sidelines, so that way you won't be strained as much as like I just mentioned, where you're stuck in one stock and you just can't get into the other one because you don't have enough funds to build a meaningful position. So yeah, that's why we got Procter & Gamble. I pretty much looked at all the Dow 30, and that's what happened. Starbucks was another stock that we did buy long term, but I did dump some of my Starbucks stock, or I dumped all of my Starbucks position. Um, just because, like I said, I was anticipating slow growth, and Starbucks is slow growth, but it's kind of slower growth. So that's typically what I'm watching for. Exxon Mobil was another one which is oversold and it's still oversold. We still see a lot of selling pressure coming out in the market. As you see, you're starting to see a curve in the buying momentum. You're starting to see a curve in the chalk and oscillator. You know. Like I said, a lot of these names are oversold. Once we get the bounce that we need, the stocks will go a lot higher. But what's really worrying investors is that we have interest rates going higher. And that's typically keeping investors on edge from them to actually buy more stock. So people are just sitting there just waiting. So the utility is a interest sensitive stock, and as you see right here, like I mentioned, the interest rates are starting to climb up, and as you see, the move has been to the downside with the XLU, and we always know that the XLU moves inversely with the XLI. So as you see right there, we have the XLI kind of oversold. And if you look in the perspective, or if you look in the holdings of these companies, or I wouldn't say these companies, but these ETFs, you will see that if you just bought these two, you'll be heavily diversified in, somewhat in different sectors of the market. Now, what we're going to be looking for in the weeks to come, or maybe for the days to come, we're going to be looking for more oversold stocks. I know iRobot was another one which is oversold. We can probably get a position in on there just because the stock is down 30%. I know a lot of people were really, they weren't really, too hyped about the guidance that they did give. But 30% to the downside. I mean, come on, that's kind of overdone. So we're gonna get filled right here, 60.39, and we're gonna hold a couple shares. Maybe this thing goes back up to 65, maybe it goes up to 70. But our expectations or our goals for the stock won't be so high because, like I said, it did receive a low guidance. They did receive lower guidance, and growth was revenue growth was slowing, and it typically worries a lot of people, and that's typically why you see the stock selling off. But at some point in time, people are going to come back in, and the stock is going to rise back up to $70, and we're going to see, the stock may try to fill a gap here, which is around $76. So we're going to be looking forward to that to see exactly when the stock, might fill a gap. So we're going to pay attention to that heavily as well. So we have a new position, which is iRobot, Procter & Gamble, Starbucks. We can go ahead and dump that sometime soon. But Exxon Mobil, which is another oversold position, another stock that you guys should definitely take a look at, is Take-Two Interactive. This is one of my holdings. As you see, the stock is getting close to being oversold, and this is definitely just a position that you want to go ahead and claim a position in, because like I said, this is video game makers. This is Grand Theft Auto. This is Take-Two, and not Take-Two. This is 2K Brands. So this is the company that owns those companies. So you want to definitely take a look at that. And we have Activision Blizzard, which is Call of Duty. So if you were interested in buying Call of Duty, you go ahead and buy a position in on that. As you see, it's about $8 off of that all-time high. We go to EA Sports. We see that stock has come down a lot. They did report, you did see somewhat of a strong report from EA Sports. That's typically what brought it up to 131. But as you see right now, the stock has filled that gap. So typically we want to go ahead and, I would say probably make a position on, make a small position in on this, just because of the stock has filled this gap. And the stock will probably go up to 125, 130-ish whenever the market does kind of stabilize here. We're going to try to get a small position in on here. Let's see if we're okay. Okay, I think our buying power has kind of been maxed out here. So, like I've said before, we want to look for stocks that are oversold, stocks that are presenting growth in the market. And like I said, there's just a lot of stocks that are presenting growth in the market. We got American Express. I mean, there's just stocks that we could talk about for days that have been oversold, or the selling pressure has definitely mounted up, and now these stocks are at a discount price pretty much. So whenever you have something like that, you want to be able to take advantage of it. So that's all we have for today. Like I said, always be looking for growth stocks. Take care, guys.